Do you think it's possible to hold a minuscule percentage of shares, maybe 5% of shares in a company, and still take all decisions unhindered? It's happening all around us in many promoter led companies. Stay with me to understand how. Tell me, how does a business start? I think the biggest of businesses that exist today, maybe a few generations back, must have started as a proprietary concern. Nobody gets into a business and says, day one, let me set up a public limited company. So the biggest of names, the Tatas and the Birlas that we have today, several generations back, some enterprising person must have taken the leap and started as a small organization, and then they must have grown. So let's imagine I am an entrepreneur by temperament. Let's imagine I am studying for engineering. I'm not an engineer, but let's imagine. And I'm raring to go, waiting to pass out. When will I complete my education so I can start my business? I finish the education, keen to start something of my own, but wiser counsels prevail upon me that, listen, you are too raw. You don't know anything about running a business. Take up a job for a while, learn the ropes before you start. So perforce, I apply to some company. Maybe I've done automobile engineering, so I joined one of the automobile companies. But deep down, that bug is there. I want to start a business of my own. I don't know how to go about it. I don't know how to begin, where to begin, but the desire is there. Let's say one day I'm sitting with a friend of mine who's a little senior, works for another auto company, and this friend is aware of my burning desire to do something on my own. So this friend says, Anil, maybe I can give you your first opportunity. We are coming out with this new model of an automobile, four-wheeler, two-wheeler, whatever. And I need a little press part to be supplied. Would you be interested? I've been waiting for some opportunity to come my way. So I have a lot of questions for him. What do you want made? How many pieces do you want made? Now this person wants a press part manufactured. You don't need to be an engineer for that. All you need is a press machine. The client usually gives you the mold and the material. You insert the mold, put in the material, press it, and the part is ready. So I ask him, how many pieces do you want per month? He says, I need 50,000 pieces. I do some back of the envelope calculations and it tells me I can make a profit of 2 rupees per piece. At 2 rupees per piece, I can make a profit of 100,000 per month. I am a relatively new engineer. I have just been employed a few months back. My salary is maybe 30, 40,000. Here I can earn 100,000. But then to start a business, I need wherewithal. I need infrastructure. The minimum I will need is a press machine. So I go and do some research. I find out maybe a press machine. I have two options, a hand operated and a power operated one. A power operated machine maybe costs 25 lakhs, a hand operated costs 7-8 lakhs. Now I don't have 25 lakhs, but 7-8 lakhs I can manage. I've saved some money. The next question is, all right, where do I install this machine? Now hand operated machine doesn't even need power. I have a spare room in my house. I suddenly realize I have all the ingredients needed to begin a business. I have the capital to buy the equipment. I have a place to install the equipment. I have a willing customer. I have the ability to execute the order. And the profit that it promises me is about 3 times my existing income. So maybe in a rash moment, I submit my resignation and I'm in business. Folks, what I have shared with you just now is one in maybe 1,000,000 examples of how a business must be starting. Some enterprising individual on the lookout for opportunities grabs at the first opportunity that comes his way and the business begins. I think it's not important at all how it begins. It is far more important how good, how sincere, how dedicated I am in my work. And if I am good, sincere, dedicated, I think there are no two ways but up. So imagine I am all these things. I do a fantastic job. This friend of mine is impressed. Soon, I'll get a second order. This time more in his interest than in mine. The first time probably this friend did me a favor. Now he realizes he has stumbled onto a wonderful vendor. And then 2 orders become 3 and 3 become 4. And now I realize that 1 machine is not enough. I need a second machine. And now I have tasted business. I realize it's not that difficult. I'm doing a pretty good job. So this time I'm ambitious. I said, now I will buy a power operated machine. I still don't have the money. One of the funny things about the business is in a running business, you rarely have spare liquidity. All the money goes back into the business. But now I'm confident enough to put in 5-7 lakhs of my own and borrow 15-20 lakhs against it and grow. And each time I fall short of money and equipments, I do the same. I pump in some money, I borrow some, and I continue growing. Now a stage comes where soon, of course, I broad-based my customer list. I realize I'm dependent entirely on one customer. That's very, very dangerous. Today, the person is a friend of mine. But tomorrow, if I do something and I happen to offend him and he stops giving me business, my business should not shut down. So I add on, I explore the market, I add on a few more clients. And now I find I'm not only running short of money, but I'm also finding it difficult to run this business alone. So one day I go to another friend of mine who happened to be my batchmate in engineering college. And I tell him, I got this wonderful business running. I've already invested 20-30 lakhs. But I think the potential is huge. If you also put in another 30 lakhs, if we double the investment, maybe we can quadruple the turnover. And if the offer is good, chances are my friend will agree. So what have I done now? I have converted a proprietary concern into a partnership firm. Guys, I'm trying to trace the stages of evolution of a business. Start with a proprietary concern, and then as you grow, maybe you become a partnership. If I continue growing and if I need more people to come in, I probably make myself into a private limited company, and the growth continues. Now imagine it's been 15 years, 20 years since I started that press shop. Over the last 15-20 years, my business has grown. I have become one of the leading industrialists of my town. Over the years, I have gathered so much of experience, so much of knowledge, developed so many connections that now I'm feeling extremely confident. I'm sure a stage must be coming in everybody's life when you look back and you see whatever I started, I did well. Whichever venture I went into, I succeeded. You have gathered knowledge, you gathered connections. A stage must be coming in everybody's life when the person starts feeling so confident, you feel I can now do anything. Let's say I've reached that level now. By anything, I mean, I feel if somebody was to give me 1,000 crores tomorrow, within no time, I could have converted this into maybe 10,000 crores. But where the hitch? The hitch is the 1,000 crores is not there. I mean, it can be very, very frustrating when you feel your millions and billions are just a step away, and for a silly reason like not having 1,000 crores, you can't go ahead. I'm calling it a silly reason because in today's time, raising money is not that much of a problem. I'm talking about the time when it was. Let's reduce the number to maybe 100 crores so that it's a manageable number. But imagine I'm talking about a really large number. So one day I'm sitting morose, depressed, trying to figure out where can I get my 100 crores from. I don't have it, my partners don't have it. When suddenly a thought drops into my head, okay, I don't have this money, my partners don't have it. But what if I walk out of here and stop at the corner of the road and stop the first person passing by and ask this person, do you have 100 rupees on you? What are the chances? Quite bright. And if I take 100 rupees from that person and 100 from the next person and 100 from the next person, in this way, if I stop 1 crore individuals and take 100 rupees each, I have my 100 crores. Why am I trying to raise the money from one person? Easy. Shall we try it today? Let's go out to the street corner, stop the first person passing by, ask that person, do you have 100 rupees? He said, yes. He says, give it to me. So why? Because in this way, I plan to raise 100 crores. And then I'm going to earn so many more hundreds of thousands of crores. Point is, why should that person even give me 100 rupees just because I want to earn thousands of crores? I need to give him an incentive. So now imagine I come to one of you and I say, guys, do you have 100 rupees? You say, yes. I say, give it to me because in this way I will collect so much and then I will do this and we will make so much money. And guys, if you give me 100 rupees, I will make you an owner of this company. Would you now be interested? You must start wondering, this fellow is a crazy guy. He's asking for 100 rupees and offering to make me the owner of a company worth thousands of crores. But the incentive is there. But tell me, to how many individuals do I make identical promises? To each of these 1 crore individuals, I say, give me 100 rupees, I'll make you the owner. Give me 100 rupees, I'll make you the owner. What am I doing? Am I trying to cheat these people? The answer is no. This is what a public limited company is all about. Folks, I want you to now listen carefully. Keep your thinking caps on. Drill holes into my theory. Try and find fault with my reasonings. I go to 1 crore individuals, I collect 100 crores, I set up my company. Next day when I go to my workplace, I find one of you standing over there. And I say, what are you doing here? This person said, the other day you asked me for 100 rupees and you said, I'm going to make you the owner of this company. Didn't you say so? I say, yes. So he says, here I am. Tell me, where do I sit? I brought this person with me, my brother-in-law. I want to give him a job. Who's that fellow? I don't like the way he's dressed. I want to fire him. This person now starts behaving like an owner, and I am in that uncomfortable position. When I wanted his money, I said, I'm going to make you the owner. When he comes and starts behaving like an owner, I have to tell him, sorry, you can't come here. And suddenly I realize, who am I to say, don't come here? What if that person says, you can't come here? Guys, prior to the public issue, I was the sole owner. Now I have 1 crore owners along with me. So question is, how do you control a company post an IPO? You don't want to lose the company itself just because you wanted money. When I went and raised money from the public, do I intend to hand over control of my company to you? No. Do I intend making you the owner? No. I want to believe as if I'm still the owner. But because you wouldn't give me the money unless I made that kind of a promise, I did it. And now when you start behaving like an owner, I have this problem. How do I handle it? I want you to tell me, guys, how do I handle it? Now somebody might say, Anil, you should hold majority shares. We'll soon examine the logic behind that answer. How will holding majority shares help me? So we need to understand, how do you control an organization that has multiple owners? Can I say that any democratic country like India, can I say it is a public limited country? You see, there are no owners. We are all owners of the country. But all of us can't go to Delhi and sit in parliament and start taking decisions. There'll be chaos. So how do you control anything where there are multiple owners? So there has to be a law. And the law says when there are multiple owners, the owners from amongst them will elect representatives who will control the entity on their behalf. In a company, similarly, there's a law, there's an act called the Companies Act, which says the shareholders will get together and elect representatives who will run the company on their behalf. Tell me, guys, what is the similarity between a country and a company? In a country, who votes? Citizens vote. In a company, who votes? Shareholders vote. What kind of citizens are we? We are all equal. What does that mean? Equality is enshrined in the Constitution. What kind of shareholders are we? We are equity shareholders, which also in a way indicates equality. And therefore, in a country, each citizen has 1 vote. And in a company, each shareholder has 1 vote. No. The difference between a country's elections and a company's elections is, in a country, each citizen has 1 vote, but in a company, each shareholder does not have 1 vote. Each share has 1 vote. And therefore, if you have 1 share and I have 2 shares, I'm twice as equal as you are. So those of you in your mind gave the answer, Anil, you want to control the company, you must have majority shares. What you're really saying is that if you have majority shares, you automatically have majority votes. That means come election time, all that I need to do is stand for elections and vote for myself. I don't care whether you vote for me or not. And I'm on the board. And I can be the managing director. But guys, the problem with that answer is, to have 51% shares, I will require 51% of the money. My whole logic of doing the public issue was, I didn't have the money. In 100 crore capital, to hold 51% shares, I'll need 51 crores of rupees. I don't have that. I don't even have 41. I don't even have 31. I don't even have 21. I have 5 crores. I want to raise 95 crores from strangers. And can I still control the company? Well, let's find out how we can do that. What you must understand is that making a public issue of shares is a very expensive and a very dangerous exercise. Why is it expensive? There are costs involved. There are legal costs, there are regulatory costs, there are merchant bankers to be appointed, there are underwriters to be appointed, brokers to be appointed, then there is printing, stationery, marketing, various costs are involved. Let's say on an average you'll end up spending about 10% of the amount you're trying to raise. Expensive exercise. And why is it dangerous? If I want to raise 100 crore, I might have to spend 10 crores. And it's dangerous because I will not collect 100 crore and then spend 10. I will first spend 10 and then hope to collect 100 crores. And what if my issue flops? Then net, I'm minus 10 crores in my pocket. So no person in his right mind will ever make a public issue of shares unless the person is absolutely confident that my issue will succeed. And there are ways, of course, of doing that. But when the right organization, with the right antecedents, with the right ingredients, with the right promoter background, with the right product, when such companies come out with a public issue of share, they are not only subscribed, but heavily oversubscribed. To give you a few examples of oversubscription in the recent past also, there was a public issue of Tata Technologies, which was oversubscribed 70 times. Nykaa issue was oversubscribed 82 times. Asian Paints was oversubscribed 117 times. And to the best of my memory, the company that has really taken the cake several years ago was a company called Tata Timken. It was a collaboration between Tata's and Timken of US. That issue was oversubscribed over 4,000 times, which means when the company wanted to raise 10 crores, they landed up raising 40,000 crores and they had to return 39,990 crores back. If I'm not wrong, the company made a profit in the very first year and paid a dividend because of the excess money they hung on to for a few weeks before they returned and the interest earned on that. I think second year onward they started making a loss and they continued making a loss till the collaboration broke. Imagine my company is not a Tata Timken, not a Asian Paints, not a Nykaa, not a Tata Technologies. We are oversubscribed 20 times. I want to raise 1 crore, I collected 20 crores. Now tell me, what is the job on hand? Job on hand is allot shares to applicants for 1 crore worth of shares and reject the remaining 19. How do I do that? One method is I sit down with a pile of applications in front of me. To the first applicant, I say allotted, 19 applications go into the dustbin. Next one, allotted, 19 go into the dustbin. My job is done, but I don't do that. Instead of that, I allot shares to everybody who asks for them, but divide by 20 whatever was asked for. So if you ask for 100 shares, I give you 5. You ask for 200, I give you 10. You ask for 500, I give you 25. As a result, somebody gets 5 shares, somebody gets 50 shares, somebody gets 100 shares, somebody gets 1,000 shares, somebody gets 5,000 shares. How much money do I have? I have 5 crores. I give myself 50 lakh shares of 10 rupees each. Imagine the face value is 10. What is the scenario at the end of the allotment process? There are people with 100, 500, 1,000, 5,000 shares. Let's say on an average everybody has on the upper side, say 1,000 shares each. And I have got 50 lakh shares. Where are you based? You are spread all over the country and some of you are overseas and I am based here, let's say in Pune, where I live. Now tell me, when is the earliest challenge to my control? Can you guys walk in, become shareholders and say, I want to throw out Anil Lamba, or do you have to bear with me for a while? Question is, did you become a shareholder first or did I become the managing director first? A few friends and I started this company. We became the first board of directors. I became the managing director. When we came out with a public issue of shares, I was already the MD. You had no choice but to accept me. When will you exercise your choice? I will run the company, let's say for the next 12 months. Then within the next few months, I will call an annual general meeting. In the AGM, the shareholders will get together and decide what will be the constitution of the board for the following year. So I have a clear run of this company now for the next 12 to 15 months. Let's create a balance sheet for this company. What does the balance sheet look like at this point of time? The share capital in the balance sheet on the liability side is 100 crores. Imagine I do a fantastic job. At the end of the year, I find we have made a profit of 60 crores. Now, a few days down the line, all of you receive a notice from me that your company's first annual general meeting is scheduled to be held on so-and-so date at so-and-so time at Pune. Kindly attend. Agenda for the meeting is as follows. Guys, what happens in an AGM? Principally, three things constitute the primary business of an AGM. Item number one, passing of accounts and appointment of auditors for the next year. Item number two, election of the board of directors. And item number three, declaration of dividend. Which item are you most interested in? Item number three, how much money am I going to get? Guys, who decides the dividend? In a proprietary concern, who decides how much money to take home and how much to leave in the company? The proprietor. In a partnership firm, who decides? The partners. So in a company, who should decide? The shareholders. But folks, you ask a shareholder, how much dividend do you want? The shareholder will say, how much profit have you made? 60 crores? Share capital is 100 crores? Give me 60%. Now, the shareholder may or may not understand finance management, may or may not understand that profit and money are two different things, may or may not understand the compulsions of this organization for working capital requirement, etc. And if they remove cash from a running business and use it for an unproductive purpose like declaration of dividend, there could be a working capital crunch, etc., etc. Point I'm trying to make is, in a large organization where there are many shareholders, if you allow the shareholders to take a decision, they themselves may take a decision that goes against their own interests. And therefore the law says the board of directors that is in charge of the day-to-day affairs of the organization, that understands the compulsions, the board of directors must make a recommendation. And the shareholders have been given the power in the AGM to either to approve the director's recommendation or to reduce it. No power has been given to increase it. So guys, imagine the board says we'll give you a 30% dividend. No shareholder has the power to say, no, I want 40%, and no shareholder will be idiot enough to say, no, give me 20%. So in theory, it is the shareholders who decide, but in practice, whatever the board recommends becomes the dividend. So folks, you receive a notice from the company management, your company's first AGM will be held on so-and-so date at so-and-so time at Pune. Please attend. Agenda is as follows. Your eyes go to item number 3. How much dividend am I going to get? And let's say the board recommends a dividend of 30%. You make a quick calculation. How many shares do I have? 1,000 shares. So what is my investment in this company? 10,000 rupees. You are in Bangalore, you are in Delhi, you are in Kolkata, you are in Singapore, you are in London. You decide, if I travel all the way to Pune, attend that AGM, vote, and come back, the end result will be I will get 30% of my 10,000, 3,000 rupees. And if I don't attend the meeting, that 3,000 is going to come home by mail. Question that you need to answer is, why did I buy these shares? Did I buy these shares for the opportunity to attend meetings, or did I buy these shares to make some money out of it? And I have made sure, guys, if you attend meetings, because chances are the money you would have spent coming and going would be far more than the dividend that you get. If you attend meetings, you're not going to make money. And if you want to make money, don't attend meetings. Folks, you have 1,000 shares each and I have 50 lakh shares. 5,000 of you have to be present at one time, at one place, to be equal to me. And I have made sure that's not going to happen. And then this is just one of the tricks. There are many more tricks which I don't have the time to cover today. There's a system called proxy. Then I start collecting proxies. As it is, it required 5,000 of you to be present at one place at one time to be equal to me. After I have collected proxies, maybe 10,000 people are required to be at one place at one time. And this is just the beginning. Let's come back to the balance sheet. How much profit did they make in the first year? 60 crores. How much dividend did they distribute? 30 crores. What happens to the remaining 30 crores? Goes to the balance sheet under a heading called reserves. Let's imagine next year they make 120 crores. What will happen to the dividend? This company will say, we've earned double. Let's give more dividend. How much more? Not 60. Let's give 35%. How much goes to reserves now? 85. Next year, if they double the profits again to 240, then let's give 40% dividend. How much goes to reserves now? 200. Guys, I am trying to illustrate the pace of growth of reserves. What was 30 in the first year, became 115 in the second year, became 315 in the third year, and it is not at all uncommon to find that if the share capital is 100 crores, the reserves of this company could be maybe 5,000 crores. If you think that's too high, let me give you some real life statistics. For example, L&T's share capital is a little below 300 crores. And the reserves in L&T's balance sheet are almost 100,000 crores. Similarly, Hindalco's share capital is little over 200 crores and they have reserves of almost 70,000 crores. Sun Pharma's share capital is about little below 2,500 crores and the reserves are well over 600,000 crores. So this 5,000 crore that I've written over here is not a very large number compared to a share capital of 100. Share capital plus reserve together is the net worth, represent the net worth of the shareholders. Guys, if the company's net worth, if the company's equity is 5,000 and if they are eligible for even a debt equity ratio 1:1, then against 5,000 they can take a loan of another 5,000. And then there are other sources of money, the creditors and vendors and so on. The liability side total would now be well over 10,000 crores. And if this company's liabilities are 10,000 crores, the assets would be 10,000 crores plus. This little press shop that we started many years ago today has land, building, plant, machinery worth 10,000 crores. Who does the company belong to? Me. How much did I invest in this company? 5 crores. 5 crores in a capital base of 100 crores was impressive enough. But 5 crores in an asset base of 10,000 crores? My investment is not 5%. It's not 0.5%. It's something like 0.05%. But the huge house that I live in belongs to the company. A dozen cars outside my house, the best of them, all belonging to the company. One guest house in every hill station of the country belonging to the company. Multiple trips across the world throughout the year, all at the cost of the company. Whose company? Mine. How much have I invested? Almost nothing. Because the money that I invested, I took away. Maybe in the very first year, by way of salary alone. My investment in this company is not only zero, it's probably negative. And you know what? Nothing wrong in this. This is not some corrupt government of officials' money. This is not money made by the wrong way. This is not illegal income. When an entrepreneur makes money, along with the entrepreneur, thousands of people get jobs, thousands of families get run, production gets done, GDP increases in the country, tax collection increases in the country, everybody benefits. Folks, what I'm trying to tell you is if you understand your area of expertise, but if you don't understand finance, you'll probably invest 50 lakhs or 5 crores and set up a small scale unit and 20 years later still be running a small scale unit. But if in addition to your area of expertise, you also arm yourself with finance management skills, what I've told you just now is not a fairy tale, guys. It's happening all around us. In the next few weeks, probably I'll share case studies with you where promoters have small percentage of holding and continue to control their company.